It was a busy earnings week. Let's look at some highlights. Meanwhile, the S&P 500 reached new highs and Bitcoin was last week's headline, hitting 64,000. Hold or sell? Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. Let's start with some bank earnings. BDO posting its highest ever in corporate history. 73 billion, up 28% from last year. Metrobank also hitting record highs, posting 42.2 billion in 2023, up 28.9%. Banking stocks continuing to benefit from interest rates being higher for longer. This explains why both BDO and Metrobank were our top 10 strongest stocks in terms of their technical charts last week. Dividends were also declared by BDO at 75 cents per share with an ex-date of March 11. Metrobank also hitting our first resistance zone at 62.75 before pulling back to 60.95. Hopefully, we retest 62.75 this week and see if we can target 64.95. Dividends and special dividends were also declared for a total of 350 per share with an ex-date on March 7. So it is possible that in March 7, it may pull back. Is there still room to rally for banks? Remember that the rate cut expectations were moved from March to around June or July this year. So this gave second life to our banking stocks, which resulted in the recent rally for banks. The possible upside for banks will highly depend on whether the Fed or the BSP will keep rates higher for longer in the next few months. But so far, if we look at the quarterly net interest margins, we can already see that this is on a slow decline. So we are very near, if not already, at the peak for the banking sector. Utilities kicked off with Meralco profits up 37% for 2023. Manila Water also posting modest growth, though consolidated revenue is up 35%. Semirara, however, profits are down 30% because of falling coal prices and the unexpectedly subdued China growth. So if we look at the SEC charts, Semirara is grinding nicely towards 33.20. At this point, for me, it will be a sell-on rally. My target price will be 35 for a possible gap fill as investors await the usual April dividend announcement. Manila Water surging to 2060 after dividends were declared at 1.129 per share, which is a 5.86% yield at 1950. So congratulations if you were able to buy some shares, but at this point, it is really best not to chase MWC anymore. SM Investments benefiting from BDO earnings as well as growth in the property and their mall business. Now, if we zoom into SMPH, I think SMPH is actually in a much better position than Ayala Land. SMPH saw better Q4 growth compared to Ayala Land. Now, if we look at the mall segment, specifically the specialty retail segment, we can see mixed results in Q4 as the fashion and home categories were in the negative, but other segments like kids and health and beauty were doing quite well. Now, this could be a good snapshot of things to come. Wilcon. How will Wilcon do? How will SSI do given these numbers from SM? Now, looking at the SM chart, it is still part of the top 10 strongest chart this week. It has reached our 948 resistance point. Look for a potential breakout and again, a possible push to 1020. SMPH, on the other hand, had a sell-off due to heavy net foreign selling and it actually breached our 32.20 support level and settled at 32.45. I think this is a good opportunity to buy given its great fundamentals. Finally, we have DNL, and of course, if your revenue growth is negative, you might as well highlight your potential growth of 10 to 15%. Its income fell 31% to 2.29 billion from 3.3 billion last year because of high interest rates, high inflation, and higher depreciation expenses from its Batangas plant. But hopefully with interest rates possibly going down, with inflation being tamed, analysts believe that DNL is primed for a comeback. Now, if we look at DNL's chart, it is actually quite weak. It hit 7 pesos resistance and has retraced back to 689. I'm looking at maybe DNL hitting 660 support. It could possibly form a golden cross soon. Hopefully, it breaks out of 7 pesos with volume to confirm its uptrend. Next, we have ICT reporting full year 2023 net income dropping 17%. But this was mainly due to some one-time expenses. But excluding these one-time expenses, net income actually grew 7%, which is better than consensus estimates. Now, looking at ICT's chart, it actually hit my target price of 300 before pulling back to 283. Cash dividends were announced at 11 pesos per share with a March 14 ex-date. Probably a stock not worth chasing anymore. As we close the first 2 months of the year, let's look at how the PSEi performed. With the strong finish last week, the index was up 4.9% in February and is up 7.7% year to date, which is the best first 2 months we've had in 10 years. So looking at the PSEi charts, we ended the week the same as last week with the shooting star doji. But the market, if you see, the market continues to grind upwards. So far, it has been a buy the dip market as we've been holding the 20 EMA line and there are really no signs of reversal yet. 2 key indicators will be announced this week. We have the inflation rate data on Tuesday and unemployment rate this Friday. Inflation is forecasted to be at around 2.8 to 3.6%. But consensus estimates this at around 3.1%. So unless we have a major surprise, we could see a potential retest of 7,000 here, and hopefully we can finally break out next week. Now let's look at a couple of charts. We have RCR. It will be on its second week after its dividend X date. I usually wait 2 weeks after the X date and monitor for a possible bottom. Hopefully 200 EMA support holds. We can see a potential golden cross 50 and 200 EMA crossing, and this may be a good time to scoop up RCR. Then we have CNPF. Remember, CNPF was our third strongest stock last week and it's still on the top 3 strongest stock. We mentioned that if CNPF pulls back to the 50 EMA and along this trend line confluence support, this could be a good swing trade to enter. If you were able to catch CNPF on its way up at around 34.20, this could be a good swing trade opportunity with a target price of 39. So if you were able to enter, good luck to us. So on to the global markets. The S&P 500 waited for PCE data to come in on Thursday before rallying after a consolidation period. It rallied back to the 5,100 level and finally breaking out to 5,132. This marks the S&P rallying 16 weeks out of the last 18 weeks. We could do a mean reversion this week, but as long as the 20 EMA support holds, everything still points to a bullish market. Unemployment numbers will come in on Friday. The services ISM numbers will be announced on Tuesday. Some volatile earnings next week could continue to push the market slowly up to maybe around 5,200. And if you don't think that's possible, let's look at some of these charts. Looking at the 250-day rolling standard deviations of daily returns, we can see that we are below the average of 0.94%. Now, what this chart basically means is that the daily movement of the S&P 500 is quite low. The volatility is quite low and is currently just at around 0.78%. Look at the volatility during crashes. We could move 3% on a daily basis. With volatility being this low, this typically signifies a bull market, and if this number continues to go down, it will be a slow grind upwards. Core PCE, or what the Fed terms as its super core indicator, came within expectations last week, which did cause the markets to rally last Thursday. But looking under the hood, core PCE seems to be spiking recently, so this could affect Fed rate decision this June or July, especially if we look at US oil finally breaching 78, touching the $80 per barrel level briefly. So this is something that could make some headlines in the weeks ahead. Meanwhile, not only is the S&P 500 making new highs, but the Nasdaq also pushed past the 18,000 level to end the week at 18,279. Even the small caps finally joining the rally, the Russell 2000, possible breakout from this resistance that could further boost the markets. Now, there are actually two arguments to this. Some say that as small caps start participating in the rally, this could actually signal the end of the bull run. So remember that previously, the bull run ended when stocks like GameStop were being short squeezed. So right now, stocks like Jumia are being short squeezed. Some say that the bull run could be over soon because even the crappiest companies are getting snatched up. But the bull argument for this is that, market breadth is just improving. And this is what everyone was looking for, right? More stocks participating in the rally. And this could be a positive sign. But, the market will always let us know in due time who's right and who's wrong. But for now, clearly, the buyers are in control. Are we in a bubble? So let's look at some past technology runs and see where we are. Some of you might still remember the internet bubble in the 1990s. We have AOL during 1991 and Netscape in 1994. I mean, do you guys even still remember the Netscape browser? I don't know. But if we look at the AI bubble today, the ChatGPT bubble, it looks like there's still room to grow. Now, if we look at this chart, what happens when we have December, January, and February in the positive? So you may be surprised to know that in the next 12 months, the markets have always been positive in years where we have December, January, and February in the positive by an average of around 16%. Now, looking at another chart, we see here years when January and February are in the positive. March tends to be higher 71% of the time by around 1.4%. By the end of the year, the markets tend to be positive almost 93% of the time by around 12.2%. And in the next 12 months, the markets tend to be positive 96% by around 15%. So, quite exciting numbers, right? Speaking of bull markets, Bitcoin hitting 64,000 last week before consolidating around 62,000. Now, looking at the seasonality patterns, we are actually quite early for the rally. But note that the halving period will be this April, and we typically will see Bitcoin pull back during the halving month. Now, will this be a good year for Bitcoin? History says so, and with the ETFs providing a little bit more stability, we could expect good things to come. The main concern for Bitcoin right now is the speed in which we rallied last week. Now, we could see Bitcoin consolidating here as we see Bitcoin tend to do after a massive 3-day rate of change. Last time that happened, 32%, 20%. Last week's 3-day rally was around 18 to 19%. So we could see Bitcoin move sideways for a while before it sets up for another rally if it does. Another busy earnings schedule this week as retailers Target, Ross, Nordstrom reports on Tuesday. Watch out for CrowdStrike after the earnings beat of Okta, which is another security company, bumping Okta 25%. Broadcom and Marvell reporting on Thursday. We could see more volatility in the semiconductor sector, especially after the SMCI rally and the SMCI being included in the S&P 500. Now, looking at the implied volatility this week, we have ANF and Gap with a possible movement of 14 to 15% either way. Right? So, that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And as usual, Good luck on your trades. Please manage your risks accordingly. And I'll see you again next week. Bye-bye.